think there are 6 points like what we look for in our investments. So like the first one would be having a star team. So like do you have storytellers in your team, ability to raise multiple rounds? I think that's something that we are looking for. I think usually some founders fall into a trap that, yeah, I don't really need the money, but I just want to raise this round. Perhaps you're strategic for us. But when you ask them about the fundraising roadmap, they don't have it. And I think that's one of the red flags for VCs. Because I think what we want is to be able to see that you're able to raise multiple rounds and also like expand your global footprints. So definitely a star team is very important. And I would say that the second point would be a big addressable market. So you would have a huge domestic market if you're based in Vietnam, third largest in Southeast Asia. So definitely you do have the advantage. And if you're also looking regionally, Southeast Asia is also very attractive. And if you're wondering why Vietnam startups have like a great valuation, yeah, these are the reasons. But I would also think that beyond the region, there could also be, the founders could also set their sights to other regions as well. Maybe not Central Asia, but usually I do see Vietnam companies look at US and also Europe. So I think those are some of the markets that they would next target, and that would it will bring us to understand that it's a big addressable market, and that would be a check in that checklist. And I would say that the third one would be demonstrating rapid growth. So if you're a seed stage company, then we probably want to see that there is a strong user or revenue growth and in this very big addressable market. So I think showing the chart and also like the whole curve is very important to us. And if you're a Series A and you already achieve product market fit, you need to show us the very high growth. So that is what we're looking for, the exponential growth. And I would say that you must be positioned to become the top 1 to 3 in the market. If you're the first in the market, then definitely good for you. But you definitely have to keep your eyes on like the subsequent competitors. Then I would say, moving on to the fourth point, it's probably the right time. We are looking for the right time. So there must be trends, macro trends that shows us that it is an industry that is positioned to grow, and there are signs of market readiness. So like adoption would not be like 10 years later, and it must be backed by traction. So that is what I meant by right time. And the fifth point is gut feel and the VC personal preference. So sometimes when you take a look at the GPs, right, you must see whether they are familiar with the domain. It's very important. If their background is in B2B, then you probably would want to reach out to them if you're a B2B startup. If it's more B2C, then you probably would like to either pitch, storytell in a way that they understand, or just drop them all together. And I would say that in terms of this point, right, the experience, the feel about the startup also matters. So like when they meet the startup, would there be any rapport built? I think sometimes that's what gets you to the next stage, at least for the second meeting or even to the negotiation of the term sheet. So I think that's something that you might also want to do. You can be confident, but don't be overconfident. And I would think that that is a good point to have confidence and not think that, oh, I'm asking money from the investors, so I'm like lower. But no, you're giving us an opportunity to invest in you. Yeah, so I think you must definitely think in that manner. And I would say that in terms of VC preference, you definitely have to go and check whether they are sector agnostic or they are sector specific, or if they are like, tech specific. So they are protein funds, they are deep tech funds. So find out more and then see whether it's aligned with your business. Yeah. And the last point is just the unfair advantage. I think all investors are well versed in that. So something hard to replicate and a defensible moat. Yeah. So these are the 6 points, if I may summarize. It's a star team, a big addressable market, demonstrating rapid growth, right time, and also gut feel, VC personal preference and unfair advantage. That sounds like 7, but it's actually 6. Yeah. And I would say that because VCs are very neutral parties and we are motivated by returns and also exits, right? So when we lead the round, you would see that your company might become very sought after. So you'll see family offices coming in and CVCs wanting to join. So I think like that is a very good signal that you can have. And also typically when a VC lead the round, it's a reference that you are very scalable. So if you want to have that message in all the investors' mind, you might want to find a VC to lead the round. So sorry for using Mandarin, but I thought that this was a very good way to help startups understand like what does fundraising success would depend on. So it's whether it is the right timing for your solution, whether it is the right market for your product market, whether it's the right market for your product market fit, and also whether you have the right team pitching to the right investors. Yeah.